Article 58. Calculating the input tax that may be recovered. When a taxable person incurs VAT, referred to as input tax, on the purchase of goods or services, they are generally entitled to recover this input tax if those goods or services are used for making taxable supplies. In some cases, purchases may be used for supplies that allow input tax recovery under Article 54, as well as for supplies that do not permit such recovery. They may also be used for activities outside the scope of the business, including private or non-business purposes. In these situations, the input tax must be apportioned so that only the eligible portion is recovered. 2. Role of the Executive Regulation. The executive regulation of this decree law provides the detailed method and rules for calculating the correct amount of input tax that the taxable person is allowed to recover. This ensures that the taxable person recovers VAT only to the extent it relates to taxable business activities, while excluding VAT linked to exempt or non-business use. It also provides that VAT attributable to exempt supplies or private use is not eligible for recovery and must be excluded. The executive regulation prescribes the calculation formula, permitted apportionment methods, and the related conditions and documentation requirements. 3. Situations requiring apportionment. The need for apportioning input tax arises when goods or services are acquired and a. Used for making mixed supplies. Some supplies, such as standard-rated or zero-rated taxable supplies, allow input tax recovery, while others, such as exempt supplies, do not. b. Used for business and non-business purposes. Goods or services might be partly used for business purposes, where recovery is allowed, and partly for private use, where recovery is not allowed. 4. Input tax calculation process. The general process for calculating recoverable input tax would involve the following. Step 1. Identify all purchases with VAT incurred. All purchases of goods and services during the relevant tax period should be listed, along with the corresponding amount of input tax paid on each purchase. Step 2. Classify purchases by use. Each purchase must be evaluated to determine whether it is fully recoverable, not recoverable, or partially recoverable, with input tax apportioned where it is used for both taxable and exempt or non-business purposes. Step 3. Apply apportionment method for mixed-use items. For purchases used for both taxable and exempt or non-business purposes, the apportionment formula under the executive regulation must be applied using methods such as revenue-based allocation, transaction count, or floor space to determine the recoverable input tax. Step 4. Record and document. Businesses must maintain clear records of all apportionment calculations, assumptions, and supporting data, along with invoices and evidence such as usage logs or cost allocations, to be available for FTA inspection. 5. Compliance requirement. Taxable persons must apply the apportionment method consistently across all tax periods, while updating it where necessary to reflect changes in business use or supply mix. Failure to correctly apply the method or maintain proper records may result in disallowed input tax claims, administrative penalties, and additional tax assessments by the FTA. For more details, contact us.